is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Abdul Golden, an operator, investor, and mentor with a deep tech background and a strong entrepreneurial mindset. He is committed to democratizing tech investing, especially for diverse and underrepresented founders, and he leads Shujaa Capital. Abdul, thank you for joining us.
Thank you for having me. Appreciate it.
So where does this podcast find you today?
I'm in Dallas. Yep, I move around a lot, but I'm in Dallas right now.
Cool. Tell us about the founding story, mission behind Shujaa Capital. What inspired you to start and run this group?
Well, really what inspired me is my time in Africa. I moved to Africa in 2021. I spent about 12 months, not quite 12 months, but close to it, traveling around the continent, just trying to understand my new surroundings and just really trace myself in my new environment. And I was looking to figure out what I was going to do next in my, from my career perspective. I had pretty much retired from the corporate world. I wasn't running a company at the time, so I was looking to figure out what was next. And then in my just travels around the continent, I realized the opportunity that presented itself there was tremendous. Actually, I was just going to start another business, kind of almost out of instinct. But a close friend of mine said, you should look into opening a VC firm. I was an angel investor in the past, so, I kind of understood about investment in startups. I had been invested in startups as an angel for several years. And so that kind of made sense to me as a next step. It was something that I enjoyed doing. And then when I realized the impact that I could have, and that's when I said, okay, that's what I want to do. And so that's what prompted me to move forward.
So your investment focused in emerging markets and undercapitalized regions. Why those, and what are you finding there?
Well, I mean, you kind of said it in your question, right? Because they're undercapitalized, underutilized, right? And so tremendous opportunity just from an impact perspective, but also just from the financial perspective, right? Investing in emerging markets, particularly Africa, is, things are not as overpriced as they are in the more developed world in terms of valuations of startups and things of that nature, right? And so you can get, better deals, better terms, things along those lines from the financial perspective, from the business perspective. But again, as I said, there's also a huge impact nature to this, even without being impact focused, right? You can help but have impact if you're approaching things properly.
So, for example, how do pre-money valuations compare between Africa and the U.S. in today's market?
Definitely less, right? I would say between 25, 35, and in some cases 50% lower valuations on the continent compared to, say, Silicon Valley.
Do you see people moving to Africa as an outsourcing function like they used to do with India and other countries? Is that happening yet?
It's happened a little bit, not of the magnitude that we've seen, let's say, with China and then India, but some of that is definitely happening. I think in combination with that, there are almost an export of resources as well. So not only is a little bit of work being outsourced to Africa. As a matter of fact, I met a young lady who was starting a call center in Ethiopia, right? So there are some examples of that. But again, not on the scale as it was that we saw, but China was growing into that. And as we see India growing into that, and even the Philippines growing into that right now. But it is happening. But I think, it's a little bit of that, but also a little bit of, exporting human resources from the continent to other countries for those same purposes.
Right. So how do you find resilient entrepreneurs and scalable opportunities in Africa? What's your chief source of deal flow there?
Honestly, it's my network. It's my network. People know what I'm looking for. And then that's the main source right now, but just kind of my reputation is growing in that because as I'm doing this more and more and more, people are starting to understand what I do, especially from a founder perspective. They know that I do a lot of kind of mentoring and coaching of founders, and people who want and need that tend to seek me out. So primarily network, but now reputation is kind of growing in that as well.
And so, what have you learned from deploying capital in these communities that they've traditionally been overlooked by the mainstream VC? What's come out of that?
A couple of things, honestly. First of all, there are brilliant people creatively, intellectually, strategically, in all the ways that you would find in any other parts of the world, right? So you have some of that that's often sometimes discounted, right? But there are brilliant people on the continent of Africa, just as there are brilliant people on developed places. But the thing that sticks out to me the most is the followers that I run into, they are very good at doing more with less, right? And so grit, resiliency, persistence, very strong in those areas, very creative, and very well skilled at doing it a lot more with less.
Great. So tell me about your approach. How do you balance the social impact component with the financial return component of your investments there?
To be honest, I don't really think about impact like as a kind of at the front of my mind, right? At the end of the day, I'm a venture capitalist, right? And so this is about the finances, about money. And if you approach that the right way and you're ethical in your approach and how you do business, the impact is going to happen, right? When you're operating in an emerging market, the impact is going to happen. If you're doing good business, you're making good decisions, you're ethical about how you approach the business, and the impact is going to come almost automatically.
And so do you actually invest in Dallas and more broadly Texas? And if so, how do you see the landscape of early stage investing there?
That's a good question because originally, say pre 2025, I was not focused on the US at all. But 2025, I decided to look more into the US for investors. I mean, sorry, for investment. And so, yes, it has become more of a focus for me to do deals stateside as well. And then I think second part of the question is, what have I seen in the US? Is that the second part?
How is it evolving over time there?
How am I evolving or how founders are evolving?
The founders, the early stage investment opportunities, what are we seeing in valuations and stage of company and sectors and growth?
Yeah, I mean, honestly, I've seen kind of more of the same, right? In terms of, the stock ecosystem in the US, kind of more of the same. Obviously, everybody's talking about AI but I would say one thing that's kind of negative that I see as negative personally is I think pitching VCs and pitching for investors is a lot more kind of well known in terms of how you approach it, or people think they know how to approach it, right? And so you get a lot of cold emails, cold calls, cold DMs that's this kind of giving you the whole pitch, the whole spiel, even before you have a chance to get to know that founder or they get a chance to get to know you, right? And so more often than not, it's a completely crisscross and miss of kind of my thesis as an investor compared to what they're looking for as a founder. So I've seen that a lot more stateside.
And so, how does Shuji Capital support founders beyond the funding? What kind of mentorship, network, or operational support do you offer to your portfolio?
That's actually one of my most favorite parts of my job is doing that part because I come from I'm an operator, you know, I come from an operator background. So, you know, the support that we give is as much as needed, right? When I work with my portfolio companies, they know going in that I'm going to try to give you as much support as you need. Even if me, myself, and my team can't give it directly, we can figure out how to get it to you. And so that's what I pride myself for doing is being able to provide whatever support that my poor coach need, either directly from the firm or via connecting them with other sources of that support.
And so, what are the trends you're seeing in the minority-led startups and inclusive innovation ecosystems? What do you see happening there?
Trends I'm seeing is that I think the numbers are growing. I think the sophistication and the maturity that some of these founders have as they're starting earlier is a lot better than they have been. And then I would also say is there are a ton of accelerators and incubators out there support these founders. Obviously, with anything, the quality of that support could vary based on the accelerator. But I will say there are a fair number of support organizations out there trying to help.
So you've raised money from LPs, limited partners, maybe high net worth, family office, or others, and so forth.
Yeah.
And then you were at one point an emerging fund manager. What are you seeing in that world today as far as raising funding from the high net worth and also first timers? What are they finding when they go into this process?
Well, actually, technically, I'm still considered an emergent fund manager because
Oh,
I think the technical definition takes it off to your fund number three, right? So I think technically speaking, you're considered an emerging manager for your first fund and your second fund. So technically, I'm still emerging. But what I'm seeing is it's tough out there. It's still tough. It's a tough fundraising environment. And you have to have a very kind of systematic, relentless approach to doing it. And I think it's only getting tougher, to be honest, because high net worth individuals, family offices, they only have more options to invest their money, right? And so it's more kind of investment supply, right? I'm sorry. Yeah, it's more investment supply, right? And so there are a lot more emerging managers. There are a lot more, say, investing platforms that are out there. It's just so easy to find a place to invest your money, right? So there's competition from all asset classes up and down the stack. And so that's what makes it pretty tough. But you just have to be systematic about your fundraising approach and relentless with it. And also understand that it's going to take probably twice as long as you think it's going to take. If you go into it with that mindset, then you're in a much better mental and emotional position to do well.
right. And so, what's your advice for investors looking to make a difference with their capital allocation? How do you tell them to, stand out and make a difference?
I would say follow your passion, whatever you're passionate about, right? Let your money talk for you, right? So, and then follow your gut versus following, say, trends, right? Obviously AI is super hot right now. Everybody's talking about AI. Almost every other founder has some kind of AI component to what they're doing. But if AI doesn't resonate with you, don't follow the herd, right? There are plenty of opportunities out there investment wise that are very strong that don't involve AI, right? So don't follow trends. If you want to make a real impact, follow what you're passionate about and be great at that, right? So that's what I would say.
Great. Had two more discussion points about Africa. I wanted to get your reaction to. The first is the demographics in Africa. Almost
Sure.
every country in the world is aging out, with the exception of those in the African continent. How do you think that gives them a competitive advantage in the technology world coming up?
I think it gives a huge advantage, right? Because just like in the States, I don't know what generation name it is. I don't know if it's the Gen Zs. I think it's the Gen Zs who basically grew up with this stuff, right? So they're so much more comfortable with it in terms of technology, so much more comfortable with it. The same applies in Africa, right? So having that crop, that tremendously large crop of younger people, it bodes well for the possibilities of economic growth, right? Consumption, right? Technology, building technology, consumption, all of the kind of economic indicators that are positive as it relates to a younger demographic, they all apply in the continent. So, I think I think the youth is going to drive economic growth as well as political changes that are probably 50 years overdue, right? And I think that's what you're finding that's happening right now in some of these countries. Even when you see conflict, these younger folks, like late teens, early 20s, early 30s, they're pushing for drastic change into how some of these countries are running. And so I think you will see is that the youth is going to force some changes that are needed in some of these countries to have them leapfrog forward. Just like they happen here, right?
Yeah.
No, just imagine what was the demographic, the typical age of a person in Woodstock, right? They were young,
And very young.
right?
Yeah.
So any of those kind of movements, revolutionary, political, whatever you want to call it, they tend to be driven by younger folks. And that's what you're going to see happen on the continent of Africa.
Right. The other one is just the fact that in Africa, they kind of missed the bank on the corner, the iBank, and just went straight to the mobile payment tool because that's where it ultimately goes, given the efficiency of it. And so they don't have any legacy systems they have to overcome. Almost everyone else has legacy systems they have to deal with and support and so forth. How do you think that's going to impact their ability to move into new markets?
That makes a tremendous difference, right? Because what happens in Africa a lot is called leapfrogging, right? So what happens on the continent is they tend to leapfrog kind of legacy technologies to get to the latest and greatest version of whatever's going to solve the problem. And so the example you gave with mobile money is one example of that, right? The same thing is happening even with AI, right? So there are definitely data centers being built in Africa to support AI, but there's also a lot of talk of AI on the edge, right? Which you don't hear about that as much here in the States. But because it allows you to implement some of the same power of AI without constructing super huge data center, right? That's talked about more in Africa. So the leapfrogging that tends to happen is what is the quickest and shortest path to solve my problem, right? And like you said, infrastructure hurdles and legacy systems are almost never an issue. And so you just go straight to the latest and greatest thing that's going to solve the problem. And so that makes tremendous difference for economic growth, for technological growth, as well as other things.
Wow. So, well, in the last few minutes that we have here, what else should we cover today?
I would just say it has changed. I would say even from the time that I met you, which is probably about a year ago, the perception of the African continent has changed a bit in terms of people seeing this opportunity. I think people are starting to wake up to the opportunity there. And I would just ask people to continue to look at it with an open mind, because you can't compare the United States today to Africa today, right? You have to look at Africa as a developing country and where it can be versus trying to make an apples and apples comparison to the United States. If you really want to make a comparison to the United States, you have to look at the United States to where it was, say, at the beginning of the Industrial Revolution, right? And what happened during that time to kind of leapfrog, technology and economic growth and all those things within this country. That's kind of the stage where Africa is right now.
That's great. That's great. How best for listeners to get back in touch with you?
I would say quick and easy, ShujaCapital.com is our website, but they can get with me directly via LinkedIn. Abdul Golden on LinkedIn is my handle. So I think those are quick and easy ways to reach me.
Well, thank you for sharing your viewpoint with us today and your update and what you guys are doing there at Shujaa Capital. You're doing some great things working in a brand new greenfield for the African market. Appreciate the time you shared with us. We'll include your content in the show notes and want to thank you for joining us today.
Thank you for having me. I appreciate it. It's fun.
Yeah.
Thank you.
Have a good one. Bye-bye. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.